Good evening, everyone. This is Joe from New York Trading Room. I want to talk about a strategy we use every single day when you trade Forex. So the first one you can see here, when the CCI get red and another the CCI getting red, we usually take short here and we stay on the short until both CCI start going green. So you go short right here and you stay on the trade. I usually use like 30-minute chart because it give you like at least you will have 6 hour, 7 hour, and you can make very good pips. Like this trade was 78 pips. Now, if you start see the CCI start going green, but the other one doesn't go green, what you can do, you stay on the trade, and if you miss this trade here, let's say you're at work or sleeping and you miss this trade, so you have another chance. When the CCI go above 100 or 150 or 200, this is a good opportunity to short right here. Okay, because the long term is red, so I'm shorting the rally. Any rally, remember I said yesterday, when you have 1, 2, 3 blue candle, you start shorting after 3 candles. So this was opportunity to short in downtrend, okay? Because here you get 1, 2, here you get 1, 2. You never have a chance to get 3. The only time you get 3 is this is 1, 2, 3, 4, and we said 3 or 4 is good. Even 5 is gonna be better, you know. So if you miss this trade short here, this is a good chance to go enter re-short again in this area, and you stay short until you see start both of them, the CCI start getting green, so you cover your position here. So you short here and you add another short here, and you will exit both trade right here when the CCI start turning green. Okay. Now, then you can see we went short again, and you making like 20, 30 pips. Then we went long again right here. When the price start in this bar here, we are long and we are above 22 pips right here. Okay, so that's why we posted on the chat. I said I'm going long OC at 72.55. We took the long here and we are above 22 pip now. Okay, so this is the trade. So this is a one technique, so you have to be relaxed and you just wait for setup. When you see the CCI going green and green, you go long. You can take 20 pips and look for different trade. Like here, you are going long and you will stay long until they both get red. Okay, now this is opportunity to go long here. If you miss the trade from the beginning, what you can do when the market dip, like something like that, it's a good buy. Okay, because the long term is we going higher, so this is a good pullback. Every time the market rally, this is a good pullback. All right, so and you run it. The reason I use the 30-minute chart because it's easy, especially if you are not fast, because some people like 70 years old and some people like 80, so they are slow. They don't expect they're gonna trade like 25 years old kid, in and out. So basically, you're taking your time, and if you miss this bar, you still have time to go long. It doesn't matter what at what price, you know what I mean? Because 1 pip, 2 pip is not big deal because you're shooting for like 60, 70 pips. Okay, so this is one. Now when I will exit my trade, if I see this is start going red and this is red, we will exit. Okay, right now we move our stop to break even. So if the market shoot for 60, 70 pip, it's okay. Right now we are in free trade. Okay, so we have 22 pips. If it makes 70 pips, we are in a free trade. Okay, if we get back and this is started going red and this is started going red, if we got stopped out, we don't lose anything. Okay, so the chance to make 70 bep or 60 bep and your chance to lose is nothing, zero, because you moved the stop loss to break even or +1 or +2 and you give the market room. If we start going higher from here, it's not bad idea to stay on the trade. Okay, like here, this is another trade. This is a good trade here. You stay on the trade, so you always will be making like 70 pips. So if you bought 60 pip, you don't have to take 70. Let's say you just bought 60 pip and your stop loss 30 pip. Your chance is gonna be a winner, 80%, 85% winner. Okay, like here, you see, you go short here, you go short here, and you bought 30, 40 pips, and it's working perfect. Like this trade, we start this trade from here. Look how much did you make? Maybe 700 if you're trading one lot. If you're trading one mini, it will be $79, which is not bad in a few hours. Okay, now your stop loss for some example like that, you went long, you already, the market went 20 pips. So every time the market move in your direction like 20 pips, put stop loss to break even. So this way, if the market reverse, you're not losing anything. If the market keep going higher and higher, you are in the free trade. So your chance to make 60, 70 pip is very big. The same thing here. Like if you went short and the market start to go, let's say you went short right here, okay, this bar, so the market start to going in your favor 20 pips, so you put your stop loss at your entry. So this way the market, you give it a room. If the market start going down, so you end up with 80 pips. Okay, so you can put As soon as you enter the trade, what you can do, you can put like 30 pips stop loss and 60 pips target. Okay. The same thing here, you go long and you stay on the trade and you get out. As soon the market move higher, you put your stop to break even, you make 50 pips. And if the market start going short, you exit your long and go short. Okay, so you be trading something like that simple all day, and every trade you will be on the trade. Of course, you can exit after 5-10 minutes, you make 20 pip, but if you want to stay for like 60-70 pip, your chance to get 70 pips is very easy. Okay, so that's why I prefer to use 30-minute chart. I don't like 5 minutes. It will be shabby, like you go one bar up and one bar down, you know what I mean? And if you go short here in 5 minutes, it start reverse on you. So don't use 5 minutes. It's easy and simple to use the 30-minute chart, or even if you want 30 minute or up. Okay, so you can do 60-minute or 4 hours or daily. It work perfectly on daily. Like for here, look at this. In the daily, you went short and look how many pips did you make. You make about 100 pips. You still short, and when you go long, you make another 80 pips, because this is 4 hours. So 4 hours, you can see if you're trading 4 hours, okay, you see, you get long here in this area. You see, you miss all this because the other one. So that's why I found in my 30-year experience, if you trade on the 30, you're not waiting too much, you're not missing too much. You can be in and out very fast. Okay, so but there's nothing wrong, you can use it on 60-minute or 4 hour or even daily. Like in the daily, you even if you get in this bar, you will be making like over 110 pips. And how about here, if you go long, if you're planning to stay like 5-6 days, you will make like 270 pips. At least you would take 100 very easy, or $60-70. So I found the 30-minute is the best to trade. So let's take a look, and it's very easy. You can scan the market very quickly. So let's